All right, good evening, everyone. Alexander, Steve, Halima.
Hello, sir.
Hello. Okay, so guys, we will be starting a new chapter today in accounts, and this will be the name of the chapter is accounts from incomplete record, also known as single entry system. So in the last session, we have almost completed our final accounts. So therefore, we will be starting this chapter, and in this chapter, we will discuss few theoretical topics from the final account as well. So I'll be covering the theoretical part of the final account along with this chapter. All right. So first of all, starting with the meaning of incomplete records. What do you mean by accounts from incomplete records? So in this chapter, we will have to first understand the meaning of incomplete record. Okay. So let's start. First of all, let's discuss the meaning of the incomplete record. Just a minute. Yeah. Okay. So what do you mean by the term incomplete record? Incomplete record, or you can say single entry system. Single entry system. So what is single entry system, or what is incomplete record? So single entry system and or incomplete record basically means okay, so it is basically a system of maintaining accounts, system of maintaining accounts. It is the system of maintaining accounts, which is basically under this system, the rule of double entry system is not followed. It is a system of accounting wherein rules of double entry accounting system is not followed. Double entry accounting system is not followed. So what do you mean by double entry accounting system is not followed? This basically means that, see, according to double entry accounting system, what do? We basically record each and basically for every transaction. We believe that in case of double entry accounting system, we believe that just that every transaction has at least two aspect. That means it will eventually affect at least two accounts. That is, every transaction will have two impact. One is the debit impact, debit aspect, or the credit aspect. That means every transaction must be recorded at two places in two accounts, and in one account we will be debiting a particular transaction, and in the other account we will be crediting the transaction. So this is what double entry accounting system basically says. And while doing the accounting as per the double entry accounting system, we record each and every transaction at two different account, considering that transaction have two aspect, the debit aspect and the credit aspect. But single entry system does not follow this concept. Single entry system does not follow this concept basically means that in case of single entry system, we do not record each and every transaction considering the debit and credit aspect of that particular transaction. There is a possibility that we we record the transaction at one place only and ignoring the other aspect of the transaction. Either we would have debited the account or we would have credited the account, but we at the same time we did not pass the transaction at both the account, or we did not cover the both aspect of the transaction, that is debit and the credit aspect. So in case of single entry system, what do? We basically record the transaction ignoring the double entry accounting concept. Okay. So this is what double entry single entry system basically means. So therefore it is called incomplete accounts. This is why it is called incomplete account, because if you are not following double entry accounting system, that means you won't be able to basically calculate the profits and losses of the business, and you won't be able to evaluate the performance of the business. Neither you will be able to neither you will be in a position to calculate the value of the assets and liabilities of the business. And there are various other limitations of single entry system as well, but for now you can consider that incomplete record or single entry system basically means a system of accounting wherein rules of double entry accounting system is not followed. That means transaction has been recorded in books of account, avoiding both the aspect of the transaction. Avoiding, either we have avoided the debit aspect or the credit aspect. We have considered only one aspect of the transaction. So generally this kind of accounting is done by small businesses. This kind of accounting is done usually by the small businesses, or you can say businesses which are unregistered, businesses which are not registered. Unregistered businesses follow this kind of account. Why do they follow these accounts, this system of accounting? There are various reasons of following this system of accounting. We will talk about that later. I will tell you the merits and demerits of this system. We will talk about the merits and demerits of the system later in this session. But for now, let's understand the definition through the PowerPoint. Just a minute. Yes, okay. Yes. So what is incomplete record? Incomplete record basically means accounting record which are not strictly kept according to the double entry system. Accounting record which are not strictly kept according to the double entry system are known as incomplete record, or you can say basically a system of accounting wherein double entry accounting system has been ignored or avoided. This system is called single entry system. Normally, an entity following this kind of system record the transaction relating to cash, debtors, creditors. These kind of transactions are maintained by the businesses, avoiding the other transactions. So normally under this system, record of cash and personal account of debtors and creditors are properly maintained, while the other information, like information regarding the asset, liabilities, expenses, and revenues are not completely recorded, either not recorded or partially recorded. Getting my point? So therefore it is called incomplete records. All right. Now we will talk about the merits of this system. Why small businesses prefer the double entry accounting, single entry accounting system? So I'll talk about the merits of the single entry. So just a minute. Okay, so merits of single entry system. You can say merits, or we can also say that why business prefer single entry system. So most of the businesses prefer the system because they find it inexpensive to maintain the accounts as per single entry system. This is it does not involve any costing, inexpensive system of accounting. It is considered as inexpensive system of accounting. Basically means that we do not require any professional to maintain the accounts as per under the single entry accounting system. So the sole proprietor who is maintaining the business, who is managing the business, he himself can maintain the accounts as per the single entry accounting system. So this is one of the advantages of single entry system, that it does not involve cost. It is inexpensive, it is cheaper, because the person who is managing the business, he can himself record the transaction. He won't be, he basically do not require any professional to maintain the accounting, maintain the record of all the transaction. So therefore it is considered as inexpensive, and it is also less time consuming. It did not take much time, less time consuming. Why it is considered less time consuming? Because we avoid both the aspect of a transaction. We avoid debit and credit aspect of the transaction. So we can basically, as per our convenience, record the transaction. So therefore it is considered as less time consuming. Also, knowledge, from the viewpoint of the knowledge, it does not require accounting knowledge. Even if a person do not have accounting knowledge, he can also maintain the account as per the single entry accounting system. He need not to be expert in the field of account. Any person who have basic accounting knowledge can maintain the account as per the single entry accounting system. So basically it does not require expertise knowledge of the account. And also you can say, just a minute, let me see, it is an okay. And under the system, only important transactions are recorded by, only important transactions are recorded by the manager or the proprietor. So therefore we can say that it is convenient to maintain account under single entry accounting system. So these are the merits. It is inexpensive, it is less time taking, it does not require expertise knowledge of the accounting, and it is also convenient, as the manager can record only important transaction. He can avoid non-important transaction, and he may choose to record only those transactions which according to him is is important. So these are the merits of single entry system. Okay, let's read the merits. These are the reasons of incompleteness, or you can say the reasons of following the single entry system. So this system can be adopted by the people who do not have the proper knowledge of accounting principles, number one. Secondly, it is an inexpensive mode of maintaining the records. Correct. Cost involved is low, as a specialized accountant are not appointed by the organization. Third reason could be it is less time consuming. Time consumed in maintaining a record is less, as only few books are maintained, because a manager or the proprietor is maintaining accounts as per single entry system. That it means that he won't be recording each and every transaction. Therefore he won't be maintaining all the accounts. And the other reason could be it is a convenient mode of maintaining record, as the owner may record only important transaction according to the need of the business. So these are few merits of the single entry system. Now let's talk about what are the demerits, what are the problems that a business can face if the business maintains the record as per the single entry system. So let's now talk about the limitation of single entry system. So what are the limitations of maintaining record as per single entry system? Single entry system. Number one. Okay, so first limitation is that since the accounts are not prepared following the double entry accounting system, therefore a business won't be able to prepare the trial balance. Trial balance cannot be prepared. This is one of the limitation. Cannot be prepared. This is one of the limitation of the single entry system. So what will happen if we won't be able to prepare the trial balance? So see, if trial balance is not prepared, we won't be able to ensure the arithmetical accuracy of the account. You know, na, I think we have already covered this chapter wherein I have told you that trial balance is prepared to check the arithmetical accuracy. So since books have been prepared by following the single entry accounting system, therefore a business following single entry accounting system won't be able to prepare the trial balance. And since trial balance cannot be prepared, therefore arithmetical accuracy is doubtful. You won't be able to ensure the arithmetical accuracy of the business. This is the this is one of the limitation. Now the next limitation could be correct ascertainment and evaluation of the financial result. We won't be able to evaluate the financial results of the business. That means we won't be able to calculate whether business have generated profits or losses during the period of accounting. So financial result cannot be ascertained accurately. Then there will be difficulty. There will be, you can say, the owner will face difficulty in claiming insurance. Insurance claim will be difficult. Insurance claims will be difficult. Let's suppose in the business premises some kind of accident occur. Let's suppose there is a fire broke out in the business premises, and due to fire broke out, certain stock got damaged. There we have a loss of goods lost by fire. All right, so in this case we will be basically claiming our insurance. So now insurance company will be asking for the records. They will ask you the records of all the goods which has been destroyed in fire. So single and the enterprise which is maintaining the account as per single entry system, they won't be able to furnish the accounts, and therefore there will be problem that entity will have to face while claiming the insurance. So these are the limitations. Other than this, if business wants to borrow funds from bank, if business want to borrow funds from bank, in that case also borrowing will be difficult, because financial institution will ask you for the proper records, and if a business entity is following the single entry system, then in that case business won't be able to furnish the proper records. So it will be very, very difficult for a firm to borrow funds from the banking institutions, and it will be difficult for a business to prepare the trial balance, and therefore they won't be able to ensure the arithmetical accuracy of the accounts. They won't be able to calculate the profit and losses of the business. Neither they will be able to analyze. They won't be able to make analysis. They won't be able to make analysis regarding, you can say, regarding the liquidity of the business, regarding the solvency of the business, And because they are not maintaining the accounts as per double entry accounting system, therefore they won't be able to take better future decisions. So they will have to face the problem regarding decision making. They won't be able to take proper decision regarding business if they are not preparing the accounts as per double entry accounting system. So these are the limitation of the single entry accounting system. So basically we have covered till now, we have understood the meaning of the incomplete record or the single entry system. Single entry system basically means that enterprise is preparing the accounts by not following the double entry accounting rules. Okay. And an enterprise which is following the single entry system may have the following merits: that they may find it inexpensive to record the transaction as per the single entry system. It will be less time taking, less time consuming. It won't require any professional or the expertise in the field of accounting. And single entry system is also convenient as it focuses on recording the important transaction of the business only. In case of single entry system, we won't record all the transaction. We record only important transaction that owner according to owner is important for the business. Only those transactions are recorded. Other than that, we have discussed the limitations. An entity following the single entry system may have the following limitation: that this entity won't be able to prepare the trial balance. This entity won't be able to analyze the position of the business. They won't be able to analyze the liquidity, solvency of the business. Neither they will be able to take the better future decisions. And obviously there will be a problem in evaluating the financial results, that is profit and losses of the business. They will be it will be difficult for such entity to claim insurance, and it will be very difficult for such entity to borrow funds from the financial institutions. So these are the limitations and merits of the single entry system. Okay. So these are the limitation. As double entry system is not followed, a trial balance cannot be prepared, as I told you. And since trial balance cannot be prepared, that means we won't be able to ensure the arithmetical accuracy of the accounts prepared. Then correct ascertainment and evaluation of the financial result will be difficult. Also, it will be difficult to analyze the profitability, liquidity, solvency of the business, and it will be difficult for a firm to raise fund from the financial institution, and it would be difficult for a firm to take better future decisions regarding the business. And the owner may face great difficulty in filing the insurance claims. It will be difficult to convince the income tax department as well. Correct? Because income tax department will be asking for the taxes, correct? And since you haven't prepared the accounts following the double entry accounting system, so it will be extremely difficult for the income tax authorities to rely on those accounts, because you haven't prepared it as per the accounting rules and regulations. So therefore, these are the limitations of the single entry system, and it is always suggested that we should not prepare the accounts as per the single entry accounting system. We should always prepare the accounts as per double entry accounting system. All right. So this is now the problem is, now the question is, if a business is preparing its account as per single entry accounting system, then in that situation, how can we calculate its correct profit and loss? What is the method by which we can calculate the correct profit and loss of such entity? So profit and loss of such entity can be calculated by two methods. We have two methods that we can apply to calculate the correct profit and loss for that entity which is following single entry system. One is called the net worth method, and the second is the conversion method. So in today's session, we will talk about the net worth method. So in case of net worth method, what do? We basically, in order to ascertain the correct profit and loss of the business following the single entry system, we prepare the statement of affairs. So by preparing the statement of affairs, uh, we can calculate the profit and loss of the business. I'll be explaining this in detail in the upcoming slides. So now just try to understand that since business is following the single entry system, it is difficult for such entity to calculate the correct profit or loss. So for the ascertainment of correct profit and loss, we have two methods that we can apply in case of such entity. First is the net worth method and the second is conversion method. In case of conversion method, what do? We prepare the trading and profit and loss account and the balance sheet, just like we used to do in the previous chapter, the final account. So we do the same thing to ascertain the profit, but the other method is net worth method. In this situation, we will be preparing the statement of affairs. All right, so hopefully everything that we have discussed till now is clear to all of you. Tell me if there is any doubt, Alexander or Halima.
No doubt.
No doubt.
Okay, all right. Okay, just a minute. So before moving forward, before talking about how do we calculate net profit or net loss, we will have to, I'll be drawing a format of income statement. Just a minute. Okay. Okay, let's suppose there is opening capital given in the question. Opening capital is given in the question, and let's say opening capital is 7 lakhs, and the date of this opening capital is also given. Let's suppose the opening capital is at basically it is given on 1st April 2021. Okay, all right. Now, other than this, apart from opening stock, you have been provided with the information regarding the closing stock as well. So closing stock, closing capital is also given, and let's suppose closing capital is 8,50,000. All right, so this is closing capital, and closing capital belongs to 31st March of 31st March 2022. Okay, so if I have provided these information, suppose I have provided you with the information of opening capital and closing capital, so any one of you can calculate the profit, yes or no? Can any one of you will tell me what is the profit of the business? What is the profit of the business? If opening capital is 7 lakh, closing capital is 8,50,000, then how much is the profit that business have generated during the year? Anybody having any idea?
Sir, 1,50,000.
Correct, perfect. 1,50,000 is the profit. So it is simple that how do we calculate profit? It is very simple that in order to calculate profit, we simply, what do? We basically, in order to calculate profit, we apply this formula. For calculating profit, we reduce opening stock from opening capital from the value of the closing capital. So if we have been provided with closing capital, we will reduce opening capital. Okay, plus if there is any addition additional capital introduced in the business, then we will reduce that part also. Let's suppose during the year we have introduced capital of rupees. Let me add this point here, just a minute. So let's suppose business as on 1st April 2021, opening capital of the business was 7 lakh, but business have introduced capital of let's say 1 lakh as on 1st September 2021. So this is the additional capital that business have received, additional capital. Okay, this is the additional capital received during the year, invested during the year. So now can you tell me what is the profit? So this was the initial capital. We have made an additional investment of 1 lakh in the form of capital in the business. So at the end of the year, we have 8,50,000. Now can you tell me what is the profit of the business? Alexander or Halima?
Sir, 50,000.
50,000?
50,000.
50,000, correct. So how do we actually calculate profit if additional capital is also given? So we will simply add opening capital plus additional capital and reduce these values from the closing capital. So 7 lakh plus 1 lakh, 8 lakh minus 8,50,000. So it will be 50,000. This will be our profit. Okay. So this is the formula for calculating profit. Profit equals to closing capital minus opening capital minus additional capital introduced in business. Additional capital introduced in business. Got it? Now let's suppose if there is information regarding the drawings as well. Let's suppose if there is information regarding drawings as well. It is given that owner of business have withdrawn certain amount of fund from the business. So drawing is also given. Drawings are let's suppose 30,000. All right. So that in that case, the formula for calculating profit will change. For in that case, the formula will be profit equals to closing capital minus opening capital minus additional capital plus drawings. This is the formula for calculating profit if drawings is also given in the question. Getting my point, everyone? So this is how we calculate profit in case of entity which is maintaining the accounts as per single entry system. So this is the formula to calculate profit in that situation. All right, everybody. But in order to calculate profit is always calculated by preparing the statement of profit and loss account. We won't be calculating the profit of the entity by simply applying the formula, but we will have to prepare a format, and this format is called statement of profit and loss account. So I want all of you to write it down. Statement of profits and loss. So this is how it is prepared. First of all, in this statement, we will write down capital at the end of the year. Capital at the end of the year. So whatever the capital is given to in the question, we will write it at the very top of this statement. Then from this, in this we will add drawings made during the year. Drawings made by proprietor made during the year. Got it? So we will write it here. Then we will reduce, then we will subtract less additional capital introduced, additional capital introduced during year. If we have made any additional capital in the, we have invested any additional amount in the business in the form of capital, then we will have to add that also. Sorry, reduce additional capital introduced during year. Got it? So we will have to subtract it. So values that need to be subtracted, we will write it in the bracket. So by adding drawings and subtracting additional capital, the value that we get is known as adjusted capital. This is called adjusted capital at the end of the year. This is called adjusted capital at the end of the year. At the end of year. So we will get adjusted capital at the end of the year by adding drawings and additional capital in capital at the end of the year. Now from this value, we will subtract. Now we will subtract what? We will subtract the opening capital. That means capital at the beginning of the year. Capital at the beginning of year. At the beginning of year. We will subtract it. So after subtracting it, the value that we get will be our profit or loss. This will be our profit or loss. If the value comes in positive, then it will be our profit. Otherwise, it will be a loss. Profit during year. Profit or loss during year. Is this clear, everybody?
Clear.
Yes, sir.
All right. So you still writing it, all of you?
Done.
Done, everyone? Alexander, done?
Yes, sir.
Okay. All right. So let me open the PowerPoint. So we will be doing one question based on this. Yeah. Okay. So we have this question number 1. Atul does not keep a proper record of his business. He gives you the following information. So basically, Atul is maintaining the record as per the single entry accounting system. He is not maintaining the record properly. And basically, he have these information. He have the information regarding the amount that he have invested in the business at the beginning of the year. He have the value. He have the information about the closing capital. And he is aware about the value, the amount that he have withdrawn from the business and values that he have added into the business. By considering all these values, we need to calculate whether Atul have generated profit or loss during the period of 1 year. Okay. So first of all, prepare the format of the statement of profit and loss account, everyone. A statement of profit or loss. all of you prepare the statement of profit or loss, and then we will write down each and every item in that statement. Then we will calculate the whether Atul have generated profit or loss during year. So always remember that we will be preparing the statement of profit and loss account at the end of the year. So statement of profit and loss account for the year end. For the year end. Okay. Now the okay, now get back to the question. So in the question we have the first item we have in the question is opening capital of rupees 2 lakh. So opening capital of 2 lakh will be written. Where do we write it? We will be writing it here. Opening capital 2 lakh. It will be written here. Correct. And we will be subtracting it from the value of the adjusted capital that we will have to calculate. Okay. Now next item is closing capital of 2,50,000. So 2,50,000 is closing capital. So we will write it here 2,50,000 closing capital. Done. After that, we have drawings made during the year is 60,000. So drawings made during the year 60,000. We will be adding it 60,000. After that, capital added during the year is also given 75,000. So 75,000 will be subtracted to calculate adjusted capital. Okay, so let's calculate it. 2,50,000 plus 60,000. Correct.
Sir, it will be 2,35,000.
Correct. So 2,35,000 adjusted capital will be 2,35,000. This will be our adjusted capital, and we will reduce 2 lakh from it. Then we will get plus 35,000. That means we are having a profit of 35,000. This is how a statement of profit and loss is prepared for the entity which is maintaining the record as per single entry accounting system. Tell me, Alexander, Halima, Steve, all of you, is this clear?
Clear.
Clear.
You guys are still writing it, or are you guys done?
Done.
Done.
Okay, now let's move to the next question. Okay, so this is the next question. Question number 2. See, Mr. Joshi started a business with a capital of 5 lakh. So tell me, both of you, this 5 lakh, what do you think it is, the opening capital or the closing capital? What do you
Opening
think
capital.
it is? Sorry?
Opening capital.
Opening capital. Correct. This is opening capital. Okay. And at the end of the year, his position was. Now, question is stating that at the end of the year, we have the following data regarding the end at the end of the year. So we have the creditor at the end of the year, 80,000. Then amount further introduced by way of capital in the business during the year is 1,50,000. Proprietor have withdrawn certain amount of fund from the business for his household expenses, 90,000. And question asks you to prepare the profit and loss statement. You are required to calculate profit and loss of the business, and you have been provided with other information as well. You have been provided with the information regarding cash in hand, cash at bank, sundry debtors, stock, furniture, machinery. These are the other items that we have. Okay, got it till this point? Any doubt? Anyone? Question is clear to everyone? We
Clear.
have been provided with the opening capital. We have information regarding the drawings. We have the information regarding the further amount invested in the business, sundry creditor, and other information. Now the thing is that in order to calculate profit or loss, we need to have the information regarding the closing capital. So tell me, do we have information regarding closing capital in this question? Is there closing capital given in the question? Yes or no? Alexander and Halima, is there information regarding
Sir,
closing
will it
capital?
be cash in hand and cash at bank closing capital?
No. This is not closing capital. Closing capital will be given by the name of closing capital only. So do you think there is any information regarding closing capital given in the question? Alexander, are you able to find that?
No, sir.
No, you're not able to find it because there is no closing capital given in this question. And as I told you just now, that unless and until we have data regarding closing capital, we won't be able to calculate the profit or loss of the business. Unless and until we have the information regarding opening capital, amount invested, drawing, and closing capital, you won't be able to calculate the profit or loss of the business. So now, how do we solve this question? So just a minute, let's start. First of all, just prepare the statement of profit and loss. And in order to calculate closing capital, we will have to prepare a working note. And I'll explain you how do we do that. So first of all, both of you prepare the statement of profit and loss account. Do it quickly. Let me know when you are done. We will write down all the values that is given in the question in the statement of profit and loss, and the item which is not given, for that we will prepare a working note. So this is how statement of profit and loss will be prepared. And in this statement, we will first of all write down the opening capital that is already given in the question. So opening capital is already given, so we will write it here. Opening capital 5 lakhs. Got it. Now, other than this, we have the information regarding further capital introduced in the business, that is 1,50,000. So additional capital is 1,50,000, and drawings made in the business is 90,000. You will have to subtract it. Drawings are 90,000. Okay. Now we only require closing capital. And if we are able to calculate closing capital, then we will be able to calculate the profit. So unless and until we have the information regarding the closing capital, we have the value of, unless and until we have the value of closing capital, that is capital at the end of the year, we won't be able to calculate the profit or loss. So for that purpose, we will have to calculate closing capital. And for that purpose, we will be preparing a working note, and in the working note, we will have to prepare statement of affairs. We will be preparing statement of affair for this business. Just a minute. Statement of affairs. The statement of affairs is nothing but the balance sheet of this business with whatever the information that we have. Based on that, we will be preparing a statement of affairs of the business, obviously at the end of the year. At the end of the year. Okay. So in this statement, we will be writing all the liability and assets values. Liabilities on the debit side. And assets. Okay. amount okay, in this statement of affairs we will be writing all the values of the asset and liabilities. So just look at the question one more time and try to find out what are the assets and liability that we have given in the question. So see, the first item that is given in the question is opening capital. So opening capital is obviously we won't be writing it in the balance sheet because we are preparing the balance sheet or the statement of affairs at the end of the year. So for preparing the statement of affairs at the end of the year, we will require all the items at the end of the year, and capital of rupees 5 lakh is something which is given at the beginning of the year. So this is not the closing capital, this is opening capital, so we won't be writing it in the balance sheet. Now after that we have sundry creditors, and sundry creditors obviously belongs to the at the end of the year. See here it is written at the end of the year his position was, so that means sundry creditor is regarding the end of the year. So we will go to the balance sheet and write it on the credit on the liability side. Sundry creditors. $80,000. Okay. After that, we have withdrawals made during the year. We won't be writing it also. Introduction of capital is made. We won't be writing it. Cash in hand is given 15,000. So cash in hand is obviously it is an asset. So cash in hand is 15,000. We will be writing it on the asset side. Cash in hand. 15,000. Cash at bank is also given. Cash at bank is how much? It is 70,000. All right. So this is already given in the question. After that, we have sundry debtors of 1,20,000. So sundry debtors is already also given. Sundry debtors 1 lakh and 20,000. Then after we have stock 2,40,000. Stock is again it is an asset. So stock value of stock was how much? 2,40,000. Okay, so 2,40,000. And after that we have furniture of 75,000, machinery 2 lakh. So furniture 75,000 and machinery 2 lakhs. Okay, so this is how the balance sheet will be prepared. Now okay, now I'm sure that you all of you must also aware about the accounting equation. So Halima or Alexander, any one of you, can you please tell me what is accounting equation? What is the accounting equation? Halima, are you able to recall this? What is accounting equation? Anyone? Alexander? Steve? What is accounting equation? How do we present the accounting equation?
Assets is equal to liabilities plus capital.
Asset equals to assets equals to liabilities plus capital. Correct. So this is the accounting equation. Correct. Keeping this in mind, can we prepare the formula of the capital from this equation? Answer is yes. So in order to calculate capital, what we can do, we can simply from asset, we can simply reduce liabilities, correct? And after reducing liabilities, the remaining value will be capital. Is that right? So can we add all the asset, subtract all the liabilities, then we will get capital. Is that right? Alexander, Steve, Halima, are you, all of you are getting this point?
Yes, sir.
Yes.
Yeah. So now what we will do, we will simply total the value of the assets. Let's total the asset side. So sum total of all the asset will be, let me calculate, 15,000 plus 70,000 plus 1,20,000 plus 2,40,000 plus 75,000 and plus 2 lakh. Okay. So sum total of all the value of the asset is 7,20,000. 7,20,000. And on the liability side, we have only creditors. So can we calculate the value of the capital now? Answer is yes. 7,20,000 is asset and liability is only 80,000. That means remaining value will be our closing capital. Is that right? So from 7,20,000, if we reduce 80,000, we will get 6,40,000. So capital will be 6,40,000. That is what we require to calculate the profit. Right, everybody? Any doubts? Alexander,
doubt.
Steve, Halima? No doubt. So just write it here. Closing capital, let me write it here. Closing capital. We have calculated it by preparing the working note. So I'm just writing it for reference. 6,40,000. Now both the sides will tally, obviously. We are not required to tally both the sides because our concern is not to prepare the statement of affairs. We are basically concerned with the preparation of the statement of profit or loss. So this is the extra, something extra work that we are doing. 7,20,000. Okay, now let's get back to the statement of profit and loss. So in the statement of profit and loss, now we can write in the value of the closing capital. Closing capital at the end of the year was 6,40,000. Got it? Now we will add 6,40,000. 6,40,000 plus 90,000 minus 1,50,000. So the adjusted capital will be 5,80,000. This will be our adjusted capital. Done, everyone? And after writing it, after subtracting the capital at the beginning of the year, the profit will be, since we are getting the value in positive, so profit will be 80,000. Tell me, Alexander, Steve, Halima, is this clear, all of you?
Clear.
Anybody want to ask anything? Alexander, is everything clear?
Yes, sir.
Okay. So in today's session, we have started a new chapter, single entry. Single entry basically means statement of accounts which is not prepared by following the rules of the double entry accounting system. This kind of system is followed by small businesses. There are certain merits and there are obviously the demerits, various demerits of the single entry system. Now the main problem that businesses face while preparing the single entry system, that they won't be able to evaluate the profit and losses of the business accurately. So for that purpose, we are studying this chapter, and in this chapter we will be talking about how can we calculate profit or loss for a business which is maintaining the accounts as per the single entry system. Okay, so we have done 2 questions in today's session, and I'll be giving you one homework as well. So please take the screenshot of this question. Just a minute. Yeah. So this will be homework, Alexander, Halima, and Steve. Please take the screenshot. This one is pretty similar to the question that we have just did. So this will be your homework, all of you. Done. Screenshot, have screenshot taken, all of you, Alexander.
Yes, sir.
Taken.
All right, everyone. So this is it in account section. Now we will take a break of 5 minutes, then we will continue with our economics part. Thank you so much, all of you.